Greetings. Welcome to my weekend market recap, 3rd September 2022. I am Sagar Nandi, retired IT professional swing trading stocks using the Q systems and techniques that I developed. You may contact me using my email ID info@superiorprofit.co. I regularly share live stock and market analysis on my website superiorprofit.co, Twitter handle superiorprofit, and YouTube channel Trading Profitably. All these are open to the public. You are most welcome to make use of them. Disclaimer: this demonstration is for educational purposes only. I am not an investment advisor. It is not a trade recommendation. Trading involves risk. You and only you are solely responsible for the outcome of your trades. Options trading can be risky. You may refer to the characteristics and risks of standardized options document from Options Clearing Corporation to decide if options trading is suitable for you. Q systems that I use for my trading decisions, they run on Metastock platform, all the components, and the technical analysis part runs on TradeStation as well. These are the different components. I will not go through them. You may learn more about them from my website. That was the last slide. Let's continue with a look at the global market, starting with Australian index all ordinaries. In all ordinaries, let's look back after bullish headwind when we had a series of bullish flow. We could take long at one of those positions, book partial profit when the upper boundary was hit, and continue to hold partial position that would get stopped out somewhere here. All along in this area, I had mentioned that because it was above the upper boundary, which was crossed at this point, we would not be initiating new long positions in all ordinaries. Then we had a dip, an attempted recovery, a lower high, and a bearish flow color candle. That could be the point to short individual fundamentally weak stocks using the trend following short setup. Since then, price has come down. Weekly is also bearish in color, bearish in shape. Friday's candle bearish in color, bearish in shape. However, now price is below the lower boundary and it is near a trend line support. So we would not like to short here. And this is where Q techniques differ from many other techniques. We like to short at a swing high point, buy at a swing low point. We don't like to buy at swing high. We don't like to short at swing low or what is near a trend line support. The weekly is looking bearish. However, if we remove the drawings and ask the question, what is the trend for all ordinaries, we have to say based on the daily chart that it is range bound. Range bound closer to the lower boundary. My preferred trading direction is actually up if it can reverse from the trend line support. If it breaks the trend line support, will I be excited to short? No, because there is another trend line support not far away, and because price will be further below the lower boundary level. That is oversold condition. I don't like to short there. I would have shorted when the bearish flow signal came near the top. Sideways market, prefer trading direction long if it goes up next week from the trend line support. After Australian market, let's look at the Japanese market. If we ask the same question, what is the trend? Looking at the right side, we have to say that it is inside a range once again because it is inside a trend line resistance and trend line support. Inside the range, where is it? It is near the lower edge and right at the trend line support. If it bounces up from here, I'll be happy to look for buying opportunities. If it breaks down, I'll not be happy to short because it will be below the lower boundary level and also because it will come very close to the weekly trend line support. Same conclusion here as was in the Australian market. Next, CSI 300 of China. The weekly had a decisive breakdown from the trend line support. However, daily is not very far from the lower boundary level, also close to the watermark support level. Price has already dropped for almost 2 weeks, so I am not excited to short CSI 300. If it goes up, will I buy? No, because there are too many trendline resistances one after another on the upside. So I am not willing to buy nor willing to short in China market. What is the trend? Here the trend is clear. The trend is downtrend because weekly support is broken, daily is having lower high, lower low. Only trend line resistances are there, no trend line support. So it's in a downtrend. However, I am neither going to short, it's already oversold near lower boundary, and not going to buy. So far, no bullish picture, either range bound or bearish. What about UK's FTSE index? FTSE once again shows the power of the Q systems in accurately timing the entry. If we look back once again, once we had this series of indecision signals, I mentioned that on this day I was not going to buy. Price did go up. Interestingly, if you notice one thing, there are subtle aspects of Q systems we may not notice every day. Now here you see after this bullish shape candle which I passed because of the bearish indecisions coming earlier, price did go up. However, they were infested with the same bearish indecision at the top. Another interesting thing, the subtle aspect that I mentioned is that you see none of the candle colors turned green after that. It remained yellow all along the way. There was not enough bullishness in the market. And then it displayed a bearish flow and dropped sharply. Looking back, the decision not to buy at this point was effective. And the other beautiful aspect of Q systems is this trend line supports. When price came down heavily until Thursday, many people could be shorting, tempted to short, either on Wednesday or on Thursday. But it was right near the two trend line supports in weekly. Looking at that, Q traders would say, no, I'm not going to short now. However, bearish it is looking on daily, and that would be very useful because on Friday price recovered sharply. In fact, if you kept an eye on the weekly trend line supports, which were also there in daily, but they are not drawn because Thursday's candle would have deleted them. However, the longer term trend lines are also valid for the shorter term, not vice versa, but longer term trend lines are always valid support levels for shorter time frames. Looking at that, you could precisely take a long trend on Friday when price started to go up after creating the early range in the real-time intraday chart. You can check that out. And these characteristics of trendline support being nearby, we saw that in other global markets also, and we will see that in USA market too. That means, as you can anticipate, I am not excited to short in the USA market now. But before looking at USA market, let's look at the strongest of the global markets. Not only strongest of the global markets, strongest of all the markets at present. That is India's Nifty 50. It is inside a range at the upper edge. However, it has not dropped much from the recent swing high. Not at all showing the bearishness that we see in the USA market. And in the weekly chart also, if you see, it's not very far from all-time high. If we want to know the exact percentage, easy to know that is less than 6, let's say 6% below all-time high. That's not a weak market. And if you see last couple of days, there is no bearishness. There was a strong bullish shape candle, and after that we have two successive inside bars. But the USA market was dropping sharply. That weakness is not reflected here. Because of that, we have to be bullish overall in the India market. I think there is no likelihood of shorting unless this trend line support is broken. That will be too risky. It can break next week. If it breaks next week, then we could look for shorting opportunities. On the other hand, if this trend line support holds, that will be a time to buy again in the Indian market. Notice also one thing, this very bullish shape candle also had a bullish flow, possible flow long setup, and that had that extreme bullish momentum, big move up 3. So we may watch out for a possible bounce from the trendline support next week if that happens. Once again, there is a trendline support nearby. Let's see what is the state of the global index as a whole. And my metastock is hanging. Sometimes it does that when I'm running webinars. We can start it again. That was a mixed picture, and let's look at the global index as a whole. What is the direction? No direction. It's inside a range, very clear range. Again created by trendline support, trendline resistance. Where it is near the tip of the triangle. And it has therefore a trendline support also. So I am not going to think of shorting the global index unless this trendline support is broken. On the other hand, if the trendline resistance is broken, there is not much distance between closing price and the trendline resistance. If it breaks, it may break next week early Monday, Tuesday. So we can take trades in either direction based on where the breakout is going, up or downside. It's range bound at present. The relative performance is showing that overall global market is outperforming USA market and India market is the strongest. Now let's look at the USA market. I am switching to Q Elite running on TradeStation. SPY. S&P 500 index. Now look back, and again I am looking back because going forward we can use these learnings, especially those who are observing these videos newly. It's useful to look back, so looking forward we know what to do. When price was here, the trend line resistance was there already, and in that market recap, right at the top I mentioned that I shorted one of the market ETFs, and now price has dropped sharply. Last week when we had the market recap, I mentioned that we had a sharp down move and there might not be many low risk shorting opportunities. However, I did identify two shorting opportunities in the market recap last week. I'll review how they did. These 5 days of the current week, price drop. However, it is right at trendline support. This is one thing I showed in multiple global markets and the global index as a whole, and we are seeing that in the USA market also. Q guideline is, and I always follow that, never short when price is right at trendline support or right above trendline support. If the trendline support is broken, then we may look for low risk shorting opportunities, but not until the trendline support is broken. Right now, if I remove the drawings, we can see few interesting things. First is, this whole week activity was high. The activity bars or volume bars had thick bars, not thin bars like here, like here. So high activity down move. However, Thursday price recovered right from the trend line support, and Friday, if you observe, though volume was much higher than Thursday's volume, it held the low of Thursday, could not breach the low of Thursday, and that is happening at a trend line support. Price is already oversold. So my preferred trading direction is actually long if price goes up from here. If the trend line support is broken, of course I will not take long, but if the trend line support holds, my preferred trading direction will be long next week. And we'll see similar pattern is there in other market ETFs also. QQQ very bearish in weekly, and once again when price came here the trend line resistance was already there, and QQQ was the ETF I shorted right at the very top, and I mentioned that in the webinar at that time before knowing the result. Very profitable trade once again. And now price has come to the trendline support. Thursday held very nicely. Friday once again we see much higher down volume than Thursday's volume. However, Thursday's low held. Friday did not breach that. If next week price goes up, my preferred trading direction will be long. Dia, same thing. Friday's volume was much more than Thursday's volume. Friday was down day. However, Friday's low could not breach Thursday's low. Trendline support is there once again. So I use the trendline resistance to short. Now I am looking for buy setup using the trendline support if it recovers next week. Lastly, IWM. This is neither near support nor near resistance, so I am not deciding my market bias based on it. All the days were down days in IWM. We can see that from the red colors in the activity bar. For all the other three market ETFs, Thursday was an up day, but not for IWM. So currently IWM is the weakest, which has reversed its status. In this area, looking at the zigzag relative performance, you can see IWM was the strongest, and now the same zigzag copper color dashed line is tilting sharply down, so it is underperforming the market. IWM I cannot use to decide my bias, but 3 of the 4 market ETFs have trendline support. They are oversold, so my preferred trading direction is long, provided market goes up next week. Do we have similar conclusion from other Q angles? Let's find out. Market breadth, again internal health check using sector, industry, stock, advanced decline breadth 1 month to 1 day. This is as red color as it gets. Everything is bearish. In terms of sectors, 91% to 100% are bearish. In terms of industries, 80% plus. In terms of stocks also, 75% plus. Across all the periods, long term, medium term, short term, everything is bearish. It's very oversold. So I will prefer to have buying opportunities now. Those will give lower risk opportunities. Short side will not give lower risk opportunities right now because market is more likely to bounce. More likely to bounce does not mean it will bounce, but if it bounces from the trendline supports of the market it is, I'll be happy to go long. And with that in mind, I have already identified few stocks. I'll discuss them if I don't forget and if I have time, at least some of them. Now the sector industry stock breadth is showing very oversold condition. And what about the bucket analysis? Let's look at this number first. 94% of S&P 1500 stocks are below mid Bollinger Band. That is also very oversold condition. We may expect a bounce. And what about the distribution of the stocks across their Bollinger Bands? That's shown by the bucket analysis bar graph. Here we see that if we just focus on the lowest bucket, that is stocks below lower Bollinger Band, that is at 15%, not at 30 to 40% level where we can expect a bounce. Still some way to go. That is if we look at only the lowest bucket, the stocks below lower Bollinger Band. But if we look at the distribution of the bars across the different buckets, we see it is very bearish, one-sided, very bearish picture, and it is more likely to bounce than not. Now, interestingly, during the week, I tweeted something. Let's look at the Twitter page. I pinpointed the day and in fact time because I was using QH in real time. If I can locate that. Here. Let's look at the post. This is what I shared in the morning session on September 1. 1st September, that is Thursday. Thursday morning, soon after market open, 9:44 a.m. Eastern Standard Time. This is what I shared. Markets are down again today. However, short trades initiated today are not lower risk trades. This is QH real-time analytics. 94% of stocks were below mid Bollinger Band, and see the percentage here. 41.9% of stocks were below lower Bollinger Band. So I could study that in real time and alert myself and others that that was too oversold condition right after market open. And remember, this is Thursday morning. And now see what happened after that. Actually, I was tracking it. It did hit 50% also. This percentage of stocks below lower Bollinger Band. If you allow me some time, I look up the snapshot. I think I saved it somewhere. Let's see, I can find it. Give me a few seconds, please. I found it. Let's drag it to this. No, not this one. Here. This is the snapshot I saved on 1st September, this time, real time, 10:51 a.m. That was the highest percentage it hit, 51%. Percentage of stocks below Bollinger Band had hit 51%. That was too oversold. Again, this is Thursday morning, right? And see what happened after that. Let's close this. Come back to QH. From 51%, where is the percentage now? 15% only, right? So a large percentage of stocks actually recovered. They were deep below, or at least somewhat below, the lower Bollinger Band, 51%. From there it came down to 15%. So we could use QH, and I did use QH to be alert on Thursday morning itself. And again, if you look back on the market ETFs, what happened on Thursday? We saw all the market ETFs, 3 of the 4 at least, they bounced right from trendline support. So I could take some intraday long trades on Thursday looking at QH oversold condition in bucket analysis and the existence of the trendline support in 3 market ETFs from which it was recovering. I am again using the oversold condition in the bucket analysis, overall distribution and the trendline supports to establish my trading direction as bullish, preferred trading direction as bullish, provided price goes up next week. So that was an analysis of Q edge market breadth. Now let's look at technical breadth. Is it also telling the same thing? Q Finder, a powerful tool to look at technical breadth, probably only one of its kind. Looking at the weekly signal first, very bearish as it gets across all categories, all signals, signals, trend following signals, or trend continuation and trend reversal. Everything is very bearish. There is nothing to be read from the headwind percentages in the weekly interval, and in the daily interval, it's not that bearish. It is bearish. Still 58% of all signals on Friday are bearish, but there are many bullish signals as well. Of course, many of them are coming from the gap ups, which was followed by reversal. Reversals in absolute number are comparable to the bullish strength. So, bullish strength taken with bearish reversal, we have to say that that is also bearish taken together. Still, having said that, we see some improvement in technical breadth on Friday. Friday was not the day to buy stocks, probably, but at least we could get ready with some stocks to buy if next week market recovers from the trendline supports. So my conclusion remains the same. Preferred trade duration long, short side will be too risky. Having said that, let's look at the few stocks I analyzed in the previous market roundup, and the only 2 stocks I shared, both were on the short direction. Video is in the on the YouTube channel. One was GLBE, and you will see another application of Q analysis. These 2 stocks I identified in the previous market recap, they were of different kinds. GLBE, I decided to share as a short idea right on this day. Based on the bearish headwind, the unique reversal signal in the daily that gave a headwind short setup. So it was a reversal short setup. And since then, price has come down enough to book a profit. So this was yet another case where we could short the very top, and in this case not using trendline resistance like I did for QQQ earlier and shared it before knowing the result, but this was not using trendline resistance, it was using the headwind reversal signal and setup. This trade worked beautifully, and the only other stock I shared in the last market recap was OLI, OLLI. And see the difference. This was not a shorting at the top, and by the way, the very top here also displayed the unique bearish headwind signal, but I discussed it in the previous recap. That would be here, and that was a flow short setup, that is trend following short setup. So I identified two trades last weekend. One was reversal headwind setup, one was trend following setup, that was only short setup, and both of them gave enough profit, we could book profit. In fact, the tweet I shared on Thursday in the morning session, I mentioned that if we had shorted stocks earlier, Thursday would be the time to start to book profit, and I would have done that if I had any short positions taken earlier, like in OLI and GLBE. Now, I did share some stock potential during the week, and interestingly, and you can see the reason why now that I did the analysis of the oversold condition and the trendline supports, why they were actually on the long side, but some of them did not confirm the setup, but it is worth looking at the stocks and see how we would stand aside in some cases, and in at least one case we could buy. And I'm discussing only stocks that I shared earlier, not stocks that I might have traded but did not share. One stock I shared was BKE. Let's look at BKE. And let's see where did I share it. It's also useful to see the snapshots when I shared the idea. So we know based on exactly what situation I shared it and what happened after that. This is my website superiorprofit.co. Under forum menu, we have this 360 degrees category where I share live analysis of stocks. This is the analysis I shared on BKE 2 days ago, Thursday. Remember, Thursday was the day when price came to the trendline support in multiple market ETFs and stopped there. So I shared BKE. Let's look at the snapshots. Apparel retail, BKE's industry was among the top 20% of industries. Yes, the industry was down because the whole market was down at that time, but it was still among the most accelerating industries, and those are attractive points to look for buy setups because the industry was behind others but sharply starting to move up, and we could see that in graphical form. Apparel retail score, whether you look at industry or alternate industry, the score jumped significantly from the previous day, and though the percentage was still down, it was starting to improve a lot. This is the industry level. The stock that I identified that was actually up, though the industry was down, the stock was up at that time 1.5%, and as a whole the industry was not weak internally, 51%, you can say balanced, neither bearish nor bullish. 51% of PR stocks of BKE were up at that time, And why did I choose BKE? I mentioned in the post the market was weak. We would do better to only think of buying the strongest stocks. And why was it one of the strongest stocks? It is undervalued and funds are accumulating, and it has a decent dividend yield of 4.34%. So worst comes to worst, one might even hold the stock for the dividend yield and seeing that if it goes up. But of course we have to plan that beforehand. We are not to start a trade thinking of swing trading and then don't follow stop loss just because it goes down. We have to decide beforehand that are you going to apply stop loss or are you going to hold it, looking at the dividend yield and other fundamentals. That is your decision. I prefer to do swing trading. Let's look at the chart as of the time I shared it. The weekly recovered significantly and it had 2 weeks of indecisive candles as of that time, as of Thursday. In daily, it was in a confirmed uptrend with higher high, higher low, and on Thursday it was actually up. Now, did it give any trade setup? No. In Q systems, we have very unambiguous trade setups. We can apply the checklists and decide if the setups were there, and none of the setups were applicable at the time of my sharing. However, the stock looked strong, so I shared it, and using intraday charts, I did take a long position. However, I closed the trade with a very small profit, you may say break even, looking at how it was moving on Friday. Thursday, I entered it, but not at the close of the day. Again, using the oversold condition in bucket analysis, in Q edge, and the trend line support in multiple ETFs. On Thursday, I was looking to buy. I found BKE. I bought it, not at the very bottom, but somewhere in the middle. I had some profit at the close, and next day I was watching the stock. It started going up, but then it was reversing, and the market was not recovering well enough. So I did not want to risk it because it did not confirm any Q trade setup on Thursday. I anticipated that it might go up, but it was not based on a trade setup. I did use the intraday charts to enter, not the daily chart. So I closed the trade on Friday with a very small profit. Now that is also important. If I am following a methodology, I I can anticipate a trade sometimes and use intraday charts to take that. Remember, I did not use the daily candle to enter the trade. So I had some small cushion. Friday I could exit the trade with a small profit. And that turned out to be a good idea because still we don't have any trade setup. From the day I shared it until Friday, we still don't have a trade setup. But if it now gives a trade setup, will I buy? Now it is coming very close to the trend line resistance. So I will not buy using daily candles unless it can break out of the resistances. However, using intraday chart, I am happy to buy if I see the market recovering because it is having strong fundamentals and a decent dividend yield. That is BKE. Now another stock I shared in Twitter. I did not mention the name of the stock on Twitter, but I did share the name of the stock in the Traders Club. The stock that I tweeted about was Insight. And let's look at the Insight's fundamentals. I think I didn't share all the detail in the tweet. In the forum post, as I mentioned in last market recap also, I share more detail. So those are more complete analysis. In Twitter, sometimes because of my desire to save time, or maybe the trade setup is not perfect, one of those situations, I don't uh, put all the detail in Twitter. So INSEE was the stock. I shared it on Twitter. I think the chart is what I shared, but let's look at the detail that I looked at before sharing. This is the fundamentals scorecard from Q Vital. Undervalued stock. It is a biotech, INSEE, INCY, Insight Corp. However, it is a biotech that makes money. Earnings per share is positive. Not very common. Many of the biotechs make loss. They can still be traded. Biotechs can be traded even if they are loss making, no issue with that. However, this biotech is making money, undervalued, and has high earnings growth, plus accelerating earnings growth. Insiders are buying, if you want to use that in your trading decisions, robust earnings quality. So fundamentals were great, and I looked at the chart. Let's look at inside. I think it did not confirm any setup, but it did break out of a trend line. Okay, it did give a breakout setup. Let's look at it. Let's look at the history template using daily interval. I shared it on Thursday when the market was bouncing up from trendline support, three of the four ETFs, and see at that time INSEE very nicely broke out of this trendline resistance. However, why I said I was hesitating about saying that there was a proper setup or not is because before that the stock was in a clear downtrend with lower low, lower high. When a stock is in a clear downtrend, I don't mind taking a breakout setup. However, I prefer to have very high volume or bullish pressure. But look at Thursday's volume when the breakout happened. Very small volume, minute volume. That's why it is a technical breakout from trendline resistance. But when a stock is downtrending, the breakout setup I prefer to take with high volume or high pressure, bullish pressure, but those were not present. If we go back to the at a glance template, you can see there was no bullish pressure also, and volume was minuscule. That is why I hesitated to share it in the forum, but I kept an eye on the stock. I did take a small position, and how I managed it, again I took a small position somewhere in the middle of the candle based on my market study on Thursday. So on Friday I had a small profit, but I saw the stock was reversing, and we can see that more clearly from the intraday chart. Why don't I go there? Q pivot chart. Here I am using 10-minute, but let's switch to 5-minute that I use in the morning session. So Thursday somewhere here I had taken the long trade in INCY. I had the position with some profit at the close on Thursday. Friday initially it started to go up, broke above the early range high, not below early range low, but it stagnated and it was coming down. In this case, I did not close the full position. I actually closed half with a very small profit, almost break even, but small profit you may say. And half actually I'm holding, looking at the stocks pattern in daily. We saw it had a breakout of trendline resistance on Thursday, and I am watching the watermark support here and here. I closed half position with very small profit. If it breaks the watermark support here, then I'll close the remaining position with a small loss. I'm okay to accept the small loss. Now in this case also, remember there was no proper Q trade setup, but I used intraday charts. That is allowed in Q guidelines. If you are anticipating a long bullish move, you may use the intraday charts, and we have proper techniques using intraday charts to take an entry. I did that in INSEE. In this case, I closed half with small profit. I did not want to hold full position. The remaining half I will close if this watermark support is broken, and if the stock reverses up again, I will add to my half position. I will make it a full position again, and I will be happy to do that if I see volume going up. Now one question that traders may need to ask themselves, and I ask myself when I am looking for a breakout trade like on this day, am I going to end up with high volume by the close of the day? But how will I know that? Because I am taking the trade intraday. How will I know that? That by the end of the day, will I have high volume breakout or not? I say that if I had to choose only one platform to run my analysis, I would choose Q on Zenith, because Zenith allows me to assess that. I'll not go into detail of that, but I'm opening Zenith on another monitor. I want to drag it to this monitor if I can. Yes. And this is intraday volume analytics in Zenith. I run Q on Metastock Zenith. It shows intraday using historical data analytics in almost real time. Almost real time because after every bar is completed, and here I am using 10-minute bars. After every 10-minute bar is completed, it plots a color here. I just use these colors, and this color will be green if we are seeing higher volume based on historical pattern. So intraday itself, I can assess if the volume is likely to end up being high volume by the close of the day. And this is not INSEE, this is SPY, and I keep an eye on this during the day. Usually on SPY, you can see for last several days, I did not have to wait for the close of the day. During intraday, all along you can see all these is 1, 2, 3. Okay, only this day was somewhat mixed, but 1, 2, 3, 4, 5. 5 of last 6 trading days, we were sure of, almost sure of, you can say, of high volume close by the end of the day using this intraday volume analytics. So that is the beauty of the entire system that I use. I don't take class on Zenith, it's not my system, but that is one part of Zenith I use in my trading. And that is how, though I took a trade in INSEE as a breakout trade and shared the stock on Twitter and the club, I knew it was not going to be high volume breakout. So it was not the ideal one that I would like to publicize, but I did take a trade and I'm holding half position. So I mentioned in Twitter, I'm going to share not only my ideas but how I manage them. And this is how I am managing different stocks that I shared. So these two long positions I shared, one I exited fully with small profit, BKE. One I am holding small half position in C, almost break even, maybe with small loss. And another trade that I shared again publicly, and that was in the forum. Was it in the forum? Let's look at that. I think it was on the forum. Let's look at it. It will be useful to look at that stock, because that stock I traded made a nice profit in such a bearish market. I closed half position. I'll explain why I closed half position. When a stock makes profit in such a weak market, it has to be strong. But why did I still close half position? That was the just previous sharing before BKE. That was on DCPH, a cancer treatment related biotech. Let's look at the post. And remember, I am sharing all of this before knowing the results. That shows the effectiveness of Q systems. Never before, never after knowing the results. Okay, this was DCPH shared on Wednesday. That was a very bearish day, isn't it? Let's look at the analysis. As I shared, biotech industry was rapidly accelerating in relative score, and it was among the top 20%. And though the market was very weak, as of the time, all these are real-time snapshots, biotech industry was actually up, not by a small percentage. 0.9% in a weak market is a significant percentage up. Well, it was not only among the top 20% in terms of accelerating industries, it was the industry with top 20% of strength also. Industry was up, and this was in the morning session. You can see 9:45 a.m. Eastern Standard Time. So the industry was allowing me to buy. I found this stock, and I mentioned just a while ago, it is common for biotechs to make a loss and we can still trade them. I do. So this is one stock that was making a loss. However, it had earnings growth, a short squeeze potential. If you want to put weightage on analysts bullish or not, they were bullish, and in itself 90% of peer stocks were up. So that was enough for me to buy the stock. The industry was strong, fundamentals were strong, and I looked at this chart and I shared something interesting. That is, this jump was due to earnings, and remember it had earnings growth, wasn't there? Let's look at it again. It had earnings growth and acceleration as well, 50% year on year, and from previous quarter it was rapidly going up, accelerating and high earnings growth. And this is the day on which earnings came out with high earnings growth and price jumped. If you are following Q guidelines, you would not buy here. However positive the news is, because it was far above the upper boundary level. Stop would be very far. And as we expect often price to come back, it came back and created a higher low. It was in an uptrend, and notice the last 3 days when I shared it. Market was very weak, but this stock was always going up, and I mentioned in the post that all these days, 3 days, had upper tail, smaller or bigger. However, price continued to go up in a very weak market. So that was very bullish looking chart. And additionally, the weekly had a very beautiful trend line support. It is gradually going up, but the support is holding. So those were all reasons for me to buy a stock, biotech related to cancer treatment, good fundamentals and holding very well. I bought the stock and I closed half position. Let's look at the stock. Why did I close half position? I want to explain that. So I took a position somewhere here on Friday when price went to the watermark resistance. I had more than 6% profit. That is a sizable profit for swing trading. In a couple of days trading stock, 6% is a good profit. I saw that at that watermark resistance earlier we had multiple bearish indecision and a bear release signal. So I booked half position profit. I did not close the full position because I think this stock is acting very strong considering the weakness we see in the market. But half position I closed. Why? And that answer is from the weekly chart. Two interesting things, right, in this chart. One, I mentioned already, after earnings grow, this jump related to earnings growth, it pulled back, made a higher low, went up. That allowed me to consider a buy, and I was finding this stock from top down analysis. The strongest industry, then look for fundamentally strong stocks, look for stocks that were going up in a weak market. That's how I found it using top down in real time. Now one interesting is this pattern after earnings. Those are useful patterns, noteworthy patterns. That's why I'm repeating them. Now notice another pattern in weekly. One bullish week, four sideways or slight downtrend. Another sharp move up, one, two, three, four, five downtrend. Again sharp move up, 3 weeks down move, and another move up. So if I see this pattern week after week, it is steadily going up, but it is shaking out the weak hands all along the way. Somebody is accumulating, some bigger players are accumulating clearly, but they are very careful to shake people away. So those who bought on Friday's close or Thursday's close, if the same pattern continues, they will likely be shaken out. And once they are shaken out, most likely the trend line we saw in Q Global, or here we can see, they will hold and price will go up again. And that is the pattern that led me to close half position on Friday at 6% plus profit. Another reason was the watermark resistance and the fact 6% was a good profit to have in a couple of days in such a weak market. So other half position I will initiate if I see this trend line is holding or even this trend line is holding, depending on how the industry is acting and depending on how my market outlook is. Market outlook has trend line support. Even if those are broken, it may be that those trend line supports in market ETFs will recover. That may mean a recovery from the DCPH, this stocks trend line supports as well. So I will decide accordingly how the market is moving, how industry is moving, how this when to close the remaining position or when to add the other half of the position. In any case, I have booked some profit, so I will try not to turn it into a overall losing trade. I can always buy it back at a lower price. That is my swing trading philosophy. Now market is at a very low oversold condition, right? We saw that from bucket analysis, QH, from technical charts. So I mentioned that this may be a good time to look for some fundamentally strong stocks that are acting well. DCPH is of course one stock that acted well and gave me a profit. Now, where could we look for such stocks that are acting well? I have a minute or so before it hits 1 hour. What about semiconductors? The stocks that are falling sharply and probably they are instrumental in moving the market down also. Semiconductors like NVDA. Very strong stock, but dropping sharply. Am I going to buy this? No. But if it comes above this watermark support, at which point we had a bullish headwind earlier that led to a robust recovery, actually that will be a very good point to buy. Very good point, because that pattern works more often than not. If we had a bullish headwind earlier that led to a significant price recovery, when price comes back there and gives us a reversal pattern, what trade setup will I have? I'll actually have a box setup if I have a bull release signal, because price will reverse up above the watermark support, and additionally I have the confidence to take the trade using the bullish headwind that came earlier, and I have to see that the stop loss is narrow or not, and stop loss will be narrow if it reverses early next week. But Nvidia is not the strong looking stock, right? I mentioned stocks that are acting well. So what I did, okay, by the way, why don't we look at Semiconductor ETF, SOXX. It is also dropping, no bullish signal, of course, so you don't expect any bullish signal in semiconductors. And interestingly, we see the bearish headwind working beautifully at the top, bullish headwind working beautifully at the bottom here also. Now it is very down, right? SOXX is down. So we expect many of the semiconductors are down. But what if I found a semiconductor stock that is fundamentally strong, but that is not coming down so much? And how to find that? And what I am trying to do is look for an industry that is very weak, but thematically that industry is very robust. We need semiconductors for almost everything nowadays. So what I did, Nvidia, and because that was in news, I carried out a peer analysis. I'm using QVital to retrieve the peer stocks of Nvidia. Here on the leftmost column, it retrieved 60 peers. Now it is retrieving data for those 60 stocks and calculating the scorecard for Q. I am not interested in Nvidia. Yes, it can give a box long setup next week, but I'm looking for stocks that are acting well now. So let's see if on Friday any stock went up. In fact, a number of them went up. And okay, went up or went down. I don't know how it closed. So let's look at the fundamentally strong stocks, both undervalued and having high earnings growth. These are the stocks. I don't remember the stocks, unfortunately. Why don't we look at all of them? See, these are all semiconductor stocks that are undervalued with high earnings growth. With few clicks, I could find them, and some of them actually went up, but I'm not sure which one I was thinking of. So let's get all of them in Q Elite and look at them one by one. Now, AVGO is an expensive stock, $500 or so. I looked at it. It's actually acting much better. On Friday, yes, it has a bearish shape candle, but it had a huge gap up and it still closed with a significant up move, thinking of the market as very bearish. So relatively it acted well. And if you look at the alternative momentum signal, the HSA like signals, addendum to Q elite, you can see it actually flagged a BGU, what is called viable gap up. So AVGO is one stock, very expensive stock, $500. Let's look at the others. MXL. Actually, this might be the stock that I was thinking. Yes, I remember now. Max Liner. Yes, it has many trend line resistances nearby, many in daily and weekly. However, this is a very interesting stock that closed on Friday with overall, you can say, bullish candle shape and a bull release signal on a day where most of the stocks reversed. If we look at the intraday pattern, where is weakness in the stock? MXL created the early range on Friday, sharply went up, pulled back but never went below early range high, and into the close when the market was sharply selling off. It actually went up with very high volume. So when we look at all aspects of Q, fundamentals, technicals, and drill down into the intraday chart, this is a very bullish close in the stock. So I didn't wait till the close of the day. I did this analysis intraday on Friday. I did take a position in MXL using stocks and I am holding it with a small profit. I will keep an eye on the trendline resistances if it goes up. If it is reversing from any of the trend line resistances, I will book profit, at least partial, and make sure the entire trade is risk free from that time onwards. And if it reverses from here itself, I will cut loss. I'll try to come out with a small profit or break even, but if I need to, I'll take a small loss and go out. But I found this stock interesting, and I did some more study on Zenith, what the company does and all. Why I found this and I'm sharing this stock is that it is acting very differently from the overall market in an industry that is critical to all countries' economy, but that industry is falling down. But this stock acted much better on Friday. So I did take a small position, but I did that using intraday charts. You may carry out similar analysis from different angles using Q systems and create a list of strong fundamental stocks you would like to buy or add to if the market recovers. But of course, the market is not bullish. If it recovers from the trendline support, that will be a good time to buy. If not, I am cautious, and you may also be cautious even if you are buying stocks, and cut loss if you need to, if the market continues to go down. Let's end today's session here. Thanks a lot for attending. I look forward to seeing you in the next session next weekend. Same market recap. Have a great weekend. And as these sessions show a disciplined way of trading and a way that says there is no reason not to do trading without some profit. We can always make some profit from the market, whatever be the market condition. Trade profitably, and thank you.